Bitcoin fell below $76,000 on Friday, marking a fresh decline in a market already struggling with macroeconomic uncertainty. The drop came amid rising inflation fears, aggressive liquidations of leveraged positions, and renewed concerns over Federal Reserve rate hikes. At the time of the report, Bitcoin traded around $75,933, a 2.3% daily decline and a weekly loss near 3%. The move extended Bitcoin's losing streak into a second consecutive week, intensifying pressure on crypto markets. Analysts noted that the decline was driven by a combination of rising oil prices and geopolitical tensions in the Middle East, particularly Iran's continued closure of the Strait of Hormuz. This disruption affects nearly 20% of global oil and gas shipments, fueling fears of prolonged inflation. The Federal Reserve's recent policy meeting minutes revealed growing concern over energy-driven inflation, shifting expectations toward possible interest rate hikes. The market's reaction to these macroeconomic signals has been swift, with traders increasingly cautious and selling off leveraged positions. Another key factor in Bitcoin's decline was a wave of ETF outflows. Over $1.26 billion in Bitcoin ETFs left the market this week, signaling a shift in institutional or retail investor behavior. While ETFs typically, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Act as a stabilizing force in crypto markets, these outflows added to the downward momentum. Despite the pullback, some analysts remain optimistic, suggesting that the current decline could serve as a healthy reset before Bitcoin attempts another major breakout later this year. However, the broader economic environment remains uncertain, with oil prices and Fed policy continuing to weigh on investor sentiment. The closure of the Strait of Hormuz has not only raised inflation concerns, but also increased volatility in energy markets, which in turn affects risk assets like Bitcoin. Traders are closely watching how these geopolitical tensions evolve and whether they lead to sustained inflationary pressures. The Federal Reserve's stance on rate hikes is also a critical factor. If policymakers signal a willingness to raise interest rates in response to inflation, it could further weaken risk-on sentiment and pressure crypto markets. In the short term, Bitcoin's price will likely remain sensitive to these macroeconomic developments. The next key signal to watch is whether the Fed's next policy statement or economic data releases provide clearer guidance on inflation and rate hike expectations. In the meantime, traders are also monitoring Bitcoin's price action for signs of support or further weakness. A retest of the $75,000 level or a potential rebound above $76,000 could offer insight into market sentiment and whether the decline is temporary or part of a larger trend. For now, the broader market remains cautious, with investors balancing optimism about Bitcoin's long-term potential against the current macroeconomic headwinds. The mechanisms at play are complex, with leveraged traders facing margin calls as prices fall and ETF outflows amplifying selling pressure. The stakes are high for both retail and institutional investors, as Bitcoin's price movements can have ripple effects across the broader crypto. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Market. The next signal to watch is not just Bitcoin's price, but also the Fed's reaction to inflation data and how oil prices respond to geopolitical developments. If the Strait of Hormuz remains closed and oil prices continue to climb, the pressure on Bitcoin and other cryptocurrencies could intensify. Conversely, if the market begins to stabilize and the Fed signals a pause in rate hikes, Bitcoin could find renewed support. For now, the market is waiting for clarity on these key variables, which will determine whether Bitcoin can recover from its current slump or face further declines.